Hello and good morning from a glorious Monday the 20th. I'm FX Blue and this is the Market Brief. So in order to balance the books, Sunak will need to cut public spending or raise taxes. And while it's not the traditional Tory way of raising funds, it's looking more likely that he will raise taxes. Ahead of the election, Boris made it clear that the age of austerity was over, and it takes more than coronavirus to prevent them from shifting to a more expansive form of capitalism. Chances are we'll see some changes made before Q4 this year, but brace yourself for the finances to look more like a socialist government for the majority of this parliament. With Brexit on the horizon, the UK of course needs to forge a path as an independent trading nation. Meanwhile, it needs to show that it will not be bullied by the rising superpowers. So fresh from that fight with China over both Hong Kong and Huawei, we had a pop at Russia over cyber terrorism. In for a penny, in for a pound, I guess. And why not? But despite all this, cable has been trading in a relatively narrow range. And while COVID, of course, remains the main driver for the FX market, sterling is likely to stay range-bound and reactive to the dollar drivers as we kick off the new week around 125.45 against the dollar. Over in the US, it's hard to understand dear old Donald's strategy at the best of times, but comparing the US data with that of other major nations, it's pretty clear that he got lifting the lockdown spectacularly wrong. It's looking more likely that Powell will need the Fed to act again at their meeting next week, as expectation for economic recovery has shifted from a V-shaped recovery to a U-shaped recovery, and most recently a W-shaped recovery has been proposed. This is a reflection of the employment market, where weekly jobless claims continue to disappoint, and of course the non-farm payrolls is totally unpredictable. Or that's my excuse for my performance in the sweepstake. But the market is waiting to see what Congress will roll out as the next much anticipated and much needed form of support. So the Fed meeting and July's non-farm payrolls may give a clearer short-term indication for the dollar. But while it continues to be driven by global risk appetite, there's no clear dollar trend in play right now. Over in the Eurozone, there wasn't much hope that Friday's EU summit would see any agreement over the pandemic relief fund, and they certainly didn't disappoint. Goodness knows how long that saga will take, but it's looking like COVID might even be over, done and dusted before they manage to sign on the dotted line of any agreement. Like most of the market though, the euro was in a pretty narrow trading range last week, and while euro dollar struggled to stay over the 114 level when it initially broke, we finished the week around 114.40, and we kick off this week challenging fresh highs at 114.65. Right, that's it from me. Have a wonderful day and join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.